Every time I sit down in front of the camera to talk about the stock market, I always ask myself one thing. Can I help someone see their financial path a little more clearly today? Because after years of working with thousands of American investors, from young people opening their first brokerage account to seasoned entrepreneurs who've lived through countless market cycles, I realize something. Investing isn't just about money. It's a story of emotion, of belief, and sometimes a story of your life itself. And as we go a little deeper, I want you to take a few seconds to ask yourself a very simple but incredibly important question. What truly creates the value of an investment? I bet many people would answer news, volatility, market momentum, GDP data, or worse, promises in online groups or those parabolic moves that make us think we've discovered some secret of the market. But here's the truth I need you to understand clearly. It's not rumors. It's not those lightning-fast limit-up days. It's not those overhyped stories about a bright future real value. The only thing that remains when everything else collapses comes from real cash flow. I once watched a friend, let's call him Mark, jump into the market right at the peak of euphoria. He bought anything hot, anything up 10% in a day, he chased. And you can probably guess what happened to Mark. Just 2 months later, all those golden opportunities evaporated like they never existed. Mark didn't lose money because the market was bad. He lost because he was buying hope, not businesses. I share that story to say this. Sometimes the most dangerous moment in investing is not when the market is crashing. The most dangerous moment is when you start believing you can't be wrong. And have you noticed this? The market always follows the same emotional cycle, a loop that repeats over and over. Gloom, doubt, optimism, greed, disappointment. The only difference is that every year, each cycle finds new victims. People who forget that the market never really changes, only humans do. When the market is gloomy, when fear takes over, when margin calls wipe out portfolios, most investors run. But here's the interesting part. That's exactly when people who understand the market's nature quietly start buying. Not because they love risk, but because they know prices are being pushed down by emotion, not fundamentals. Then when the market recovers and rises through disbelief, the ones who just lost money stand on the sidelines, watching, telling themselves, I'll wait for it to go a little higher before I get in. And you already know how that story ends. When the market is up 15 to 20%, they start fearing they'll miss out. They jump in. They use margin. They buy at levels where the earlier investors have already begun selling. I've seen this play out hundreds of times. I've spoken with countless people who come to me with the same question. Why is it that every time I buy something, it goes down? And I always tell them the same thing. Because you're buying emotion, not value. I want you to understand this clearly. 90% of people in the stock market are speculators, not investors. They don't analyze businesses. They don't read financial statements. They don't care about cash flow, profits, debt levels, margins, or a 5-year business model. They buy because everyone else is buying, and then they become long-term investors, accidentally, simply because they don't cut their losses. But you don't have to be like that. If you're watching this video, maybe you've made mistakes before. Maybe you're holding a stock you're not sure will ever recover, or maybe you're sitting out of the market, unsure when to get back in. Wherever you are on your journey, I want you to remember this. Investing isn't a game of speed. It's a game of understanding and patience. The investors who survive multiple market cycles aren't the smartest ones. They're the ones who stay grounded when the market turns chaotic. They understand one simple but powerful truth. Cash flow is the only thing that never lies. Today, I want to take you deeper into that idea, into how the market actually operates, why we keep buying at the top and selling at the bottom, and how you can break free from that emotional loop and start investing like someone who truly understands the game, instead of someone getting swept away by it. If you're ready, let's begin. Now, I want you to picture the market we follow every single day. If you look at it only through those flashing red and green numbers on the screen, it seems chaotic. But if you look long enough and deep enough, you'll start to see a rhythm. It behaves almost like a living organism. It breathes, it expands and contracts. It gets excited, and it gets scared. And in every one of its cycles, human emotion plays a much bigger role than any mathematical model ever could. I remember one afternoon, after the market had fallen for 5 straight sessions. A client of mine called, his voice tight with worry. "Is the market about to crash?" I answered him gently, "It's not the market that's about to crash, it's your confidence." Because the truth is this, the market doesn't care about your fear. It only reflects the collective fear of everyone. When forced selling starts, you see the sharp drops, the desperate sell at any price orders. But what's really behind all that? People using way too much margin, people chasing hype without managing risk, people who believe the market can only go up. And in those painful moments, there are always a few who stand strong. They're the ones who studied the business long before the panic. They understand the company's cash flow. They know exactly where real value is. And they recognize that when herd emotion pushes prices far below fair value, that's not a disaster. That's an opportunity. In all my years in this profession, I've never seen a professional investor buy at the peak of euphoria. But I've seen countless retail investors jump in at the most euphoric moment because they're afraid of missing out. They're afraid their friends will profit without them. They're afraid of being the only person not part of the next big thing. And when the market turns, they're also the first to panic. Do you see a bit of yourself in that? I'm not asking to make you feel guilty. I'm asking because I want you to understand something important. There's nothing wrong with having emotions. The mistake is letting emotions make your decisions instead of data. I once mentored a group of young investors, and one of them asked me, "How do I know when the market is in the optimism phase and when it's in the euphoria phase?" I answered, "When people start showing off their profits everywhere, that's optimism. When people believe the market will never go down again, that's euphoria." And this is the most important part. You can't control the market, but you can control how you respond to it. When you invest based on value, based on real cash flow, you see the market through a different lens. You stop fearing big red days. You stop getting swept up in hot green ones. You start asking, is this business sustainable? Instead of, how much did this stock go up today? And that moment, when you stop viewing the market as a game of luck, is the moment you become a real investor. Looking back on my years in this industry, I realized the market doesn't just teach you about investing. It teaches you about life. It teaches you patience when others lose theirs. It teaches you steadiness when everything around you shakes. It teaches you not to follow the crowd just to feel safe, because the crowd has never led anyone to lasting wealth. And above all, it teaches you to be honest with yourself. Ask yourself, do you truly understand the business you're holding? Do you know how much cash flow it generates every year? Do you know whether it's growing or quietly eroding your capital? Or are you just hoping? I want you to remember this, both as a conclusion and a new starting point. Cash flow is the voice of truth. It doesn't exaggerate. It doesn't brag. It doesn't mislead. It either flows into the business or it doesn't. And if you build your portfolio on those truths, not on the noise out there, you'll start to see the market differently. Less pressure, less fear, and far more opportunity. You don't need to predict the market. You just need to understand it, and you need to understand yourself. If today's video made you pause, even for a moment, to rethink your strategy, your goals, and the reason you invest in the first place, then that alone is a big step forward, and I'm here to help you take the next ones. Thank you for staying until the end. We have much more to talk about value, about the market, and about the financial journey you deserve to build. I'll see you in the next video.